Hey everyone, my name is Corey Dayharsh, and I'm here to bring you some basic information on how to use your retirement funds in alternative investing. So outside of the type of investments you thought probably were the only things allowed. Let's get started. So my intent today is to give you a brief description of what a self-directed retirement account is, how you can utilize it, so what's allowed and what's not allowed, and how to get these things funded, which a lot of people think it's going to take a lot of time or be a big process. It's actually very sweet and simple. I'll get to that later on. And I'm also going to give you a great benefit for listening through today's presentation. It's going to be short, it's going to be sweet, and we're going to keep everything rolling. So a brief disclaimer before I get started is that I am here to give you educational information. I'm not here to give you any tax, legal, or financial advice. I always will implore you, as will the company I work for, Advanta IRA, to do all of your own thorough due diligence before participating in any self-directed retirement investments. Again, self-direct is the main part of this. It's up to you to serve as your own fiduciary or advisor, or build a team of CPAs, attorneys, and so forth around you to help you make your investment strategies work. So what is a self-directed account? It's basically a retirement account where you can invest into any asset outside of the public sector. So you probably have an account with a fiduciary or a financial advisor that only lets you invest into publicly traded stocks, bonds, mutual funds. But a self-directed account is with an administrator like Advanta IRA that is not a fiduciary and effectively lets you invest into anything else that the IRS will allow. That includes real estate, private lending, cryptocurrency, precious metals, pretty much anything under the sun you know how to make money with by investing. You can do so in the right strategy with a self-directed retirement account. Now, what I'm going to just kind of break down here is a few different key reasons we see people switch over to self-direction. First off, they hear everything I'm saying and they realize this is a new source of capital for an investment strategy I've already been participating in. I've already been doing private lending, or I've already been fix and flipping real estate, or investing as limited partner into different deals. Well, once you learn that this is available, pulling some money out of a retirement account and moving it over to a self-directed so that you can make those investments is just going to bolster your investment capital available. A lot of people are getting fatigued with the stock market. Over the past few years, we've seen the roller coaster ride that can be. And even if people don't move all of their funds out of the traditional market into alternatives, a lot of people are starting to diversify and at least make an investment or two in a self-directed capacity. And finally, the tax benefits of investing with your retirement account as opposed to your personal savings are immense. You can avoid capital gains tax and other types of taxes by making these passive investments into various assets that you otherwise would not be able to benefit from. So let's break down real quickly the rules around these types of investment strategies. The IRS only restricts a few different asset classes, and that is you cannot invest into life insurance policies or hard to value collectibles like antiques or fine wine or artwork, anything with a subjective value, or assets the IRS doesn't want to see you hold in your retirement account. Outside of that, as I said earlier, you could probably structure any deal you'd like to within this type of account without making a deal with a disqualified person, which is the next category here. Disqualified persons are basically yourself, your spouse, your parents, your children, or any businesses that those individuals own or control day-to-day operations of. You can partner with these people, with these disqualified persons, but you cannot buy or sell a deal or let one of these disqualified persons benefit from an asset owned by your retirement account. So what type of accounts qualify? We offer the standard traditional and Roth IRAs, which you're most likely familiar with. We also offer inherited IRAs if someone's passed away and left you as the beneficiary to their account. And then if you're someone with either a high deductible health policy or an education savings account is available. So high deductible health policies or HSA account is something that would be fitting. Or again, young ones in your life, you want to set aside money for their qualified educational expenses. A covered out ESA account's a great option for you. And for those of you that are small business owners or self-employed, we also offer SEP IRAs, simple IRAs, and solo 401k plans. So how do you get these accounts funded? As I said right when I started, it's a big misnomer out there. People think it's going to take too long or be too tedious to get an account funded. All in all, it takes about a week to a week and a half, depending on how you're funding the account. So the first and most common way people fund these accounts is by what's called an annual contribution. An annual contribution is something you can make into the right plan based on the total income that you're generating and your allowance for contributing. So every plan is going to have a different contribution limit, and based on that limit and how much you generated that year, tax filing wise, you can contribute up to that amount. The other common way that people fund these accounts is an IRA to IRA transfer, meaning you have money in an IRA and you want to transfer it to the same type of IRA with a different company. That's facilitated within about a week. You typically provide the transfer form to the company you'd like to receive the funds. They send it to the company currently holding your funds, and it usually takes about a week or so for a wire to be sent or a few days for a check to be cut. And the final way people fund these accounts is with a rollover, meaning you have an employer-sponsored plan and you're looking to take money out of that plan, typically after you leave a job, and move it over into a new plan or a rollover. A lot of times these are called rollover IRAs. With this method, you're typically having to have a check cut in the distribution process and either mailed to your home address or mailed to our address directly for deposit, at which time it goes on a standard deposit hold. So you're looking at about a week and a half to possibly 2 weeks with a rollover. Now, if you are with a current employer, your current employer plan may also be able to be rolled over. What you have to verify specifically is if you're eligible for an in-service rollover. If you're not eligible, you may become eligible once you've been with the company for a certain amount of time, or you have reached a certain age, typically 59 and a half, standard retirement age, or you may just not become eligible until you quit that job. That's all dictated by the plan agreement between your employer and the retirement company that's administering that employer-sponsored plan. So those are the key ways to get these accounts funded. Again, all in all, you're looking at about a week to a week and a half, roughly, possibly 2 weeks if you're having a check cut and there's a little bit of a drag time there. But I do want to also express that the income you generate from these investments are considered earnings. They're not counting against your contributions that I mentioned earlier on that last slide. A lot of people think, oh, I made an investment. It gave me $3,500 this year. That's less that I can contribute against my annual contribution limit. And that is not true. That is passive income being generated by the investment you made that does not count against your contribution limit at all. Now, in closing, I do want to let you know how easy it is to get one of these accounts set up. You just reach out to me directly. I provide you the application paperwork once I know where your funds are coming from. That paperwork will take you about 10-15 minutes to complete. We'll get the account open. We'll start getting the money moved over, and you're ready to invest within about a week to a week and a half's time. Just feel free to reach out to me directly if you would like. And also, if you reach out and tell me you heard this presentation, I will be able to waive your $50 application fee. That is a standard fee that we have on our applications, but I am able to waive that if you reach out to me and mention that you heard this presentation. Here's all my contact information. If there's anything I can do to answer any questions, assist you with strategies, or assist you with rules, regulations, please feel free to reach out. I'm very happy to assist however I can, and I look forward to speaking with you soon. Thank you.